Hello and welcome. My name is Rawi, and today we're going to talk about something that has changed millions of lives around the world: how to start investing in the stock market. Now, if you're someone who feels the stock market is too complicated, too risky, or only for rich people, this video is for you. We'll go step by step: what the stock market is, why you should invest, what you need to get started, how to pick your first stocks, some important rules, common mistakes to avoid, and finally, some tips to help you succeed. So grab a cup of coffee, sit back, and let's begin your journey toward financial freedom.
So what exactly is the stock market? Think of it as a giant marketplace, like a farmer's market. But instead of buying fruits and vegetables, you're buying pieces of companies. When you buy a share, you're buying ownership, even if it's a tiny piece of that company. If the company grows and makes money, you benefit because your shares usually go up in value. Sometimes they also pay you part of the profits in the form of dividends. For example, if you buy shares of a company like Apple, you're essentially becoming one of its owners. Even if it's just one share, you now own a piece of that business. That's what makes the stock market special. It allows ordinary people to build wealth by investing in businesses that drive the economy.
So why should you invest? Why not just keep your money in the bank? Well, here's the truth. If you leave your money sitting in a savings account, it grows very slowly. The interest rates are low, and over time, inflation actually eats away at your money's value. On the other hand, the stock market has historically given much higher returns, sometimes 7 to 10% per year over the long term. Let's say you invest $1,000 today, and the market grows at 8% per year. In 10 years, it could grow to around $2,159, more than doubling your money, while keeping it in the bank might barely add a few $100s. So investing isn't just about making money. It's about protecting your money from losing value and helping it grow faster than inflation.
Now that you know why to invest, let's talk about what you need to get started. There are 3 basic things. 1, a brokerage account, also called a trading account. 2, a beneficiary owner or BO account. This is what actually holds your shares. And 3, of course, a little knowledge. Opening these accounts is much easier than most people think. You'll need some documents, like your photo ID, a bank account, maybe some proof of address, and that's it. You can go to a brokerage firm in person, or even better, many online platforms now let you open everything digitally from your phone or computer. Think of this as opening the door to the stock market. Once you have these accounts, you're ready to start investing. Now that you know why to invest, let's talk about what you need to get started. There are 3 basic things. 1, a brokerage account, also called a trading account. 2, a beneficiary owner or BO account. This is what actually holds your shares. And 3, of course, a little knowledge. Opening these accounts is much easier than most people think. You'll need some documents, like your photo ID, a bank account, maybe some proof of address, and that's it. You can go to a brokerage firm in person, or even better, many online platforms now let you open everything digitally from your phone or computer. Think of this as opening the door to the stock market. Once you have these accounts, you're ready to start investing.
This is the part that scares most beginners: choosing stocks. But don't worry, it's not about finding the perfect stock. It's about finding good companies and holding on to them. So what makes a good company? Companies that make consistent profits, companies that pay dividends regularly, companies that have a strong reputation and stable business. For example, a company that sells something everyone needs, like food, electricity, or medicine, is more stable than a company selling luxury handbags. Where can you find this information? Check the stock exchange websites, like the NYSE or NASDAQ. Read company annual reports. They tell you how the business is doing. And follow financial news. You don't need to be an expert. Just stay informed. And always remember, don't put all your money into just one stock. Spread it around. This is called diversification, and it helps protect you from big losses.
Before you put any money into the market, keep these golden rules in mind. Rule number 1, never invest money you can't afford to lose, like rent or grocery money. Rule number 2, don't expect to get rich overnight. The stock market rewards patience. Rule number 3, don't follow rumors or hot tips from random people. Always do your own research. Rule number 4, if the market drops, don't panic. The stock market moves up and down, that's normal. A good way to think about it is this: you're planting a tree, not growing grass. It takes time to grow, but the fruits are worth it. Many beginners fall into the same traps. Taking loans to invest, never borrow money to buy stocks. Putting all your money in one company, very risky. Panicking and selling when the market dips, the biggest mistake. Buying stocks without understanding the company, don't gamble. Here's an example. Imagine you bought a stock and tomorrow it drops 10%. If you panic and sell, you've locked in your loss. But if you hold on and the company is strong, it may recover and grow even higher over time.
Here are some special tips to help you succeed. Start small. Even a few $100s is enough at first. Keep learning. Read books, watch videos, follow experts. Focus on quality, not quantity. A few good stocks are better than dozens of random ones. Don't chase cheap stocks thinking they'll make you rich fast. That rarely works. And most importantly, set a clear goal. Are you investing to retire early, to buy a house, to send your kids to college? Knowing your goal will help you make better decisions.
So to wrap up, the stock market is not magic, and it's not a lottery. It's a place where patient, disciplined people grow their wealth over time. You don't need to be rich to start, but if you start and you stay disciplined, you can become financially independent. Learn, stay calm, and remember, the best time to start investing was yesterday. The second best time? Today. So take that first step and start your journey toward financial freedom.
If you found this helpful, please like this video, share it with your friends, and subscribe for more. And if you have questions, feel free to leave a comment below. I'd be happy to help. Thank you so much for watching. I wish you all the success on your investing journey. Take care and see you in the next video.